Brent is likely to be lucrative for oil traders. Crude prices have added nearly 12% and are on a track to close July with the biggest monthly gains since January 2022. Such a steep rise can be attributed to oil supply cuts by Saudi Arabia and Russia, aimed at propping up prices. Another factor contributing to higher oil prices is the prospect of increased energy demand. After all, the most recent data on the U.S. economic output topped forecasts, and China promised to take measures to boost economic recovery. Also, a rebound in the currency market amid a weaker dollar allowed oil prices to consolidate just above $84 per barrel. Nevertheless, the situation has not changed dramatically. Before that, oil had already been trading around that mark for a couple of days, albeit slightly lower, and things may change only tomorrow after the United States releases another batch of data on the crude inventories. In the case of a drawdown in its stocks, oil may well advance to $85 per barrel. A weaker dollar also contributed to stronger gold prices. The precious metal climbed to just above $1,950 per troy ounce. However, the recent interest rate hikes are making the debt market more appealing, which will gradually put pressure on the gold prices, bringing them to $1,900 per troy ounce. Another thing is that this process may stretch for months or even more if central banks start reversing their policy stance and post-monetary policy tightening. In this case, gold is likely to resume its bullish run. Meanwhile, the ruble unexpectedly weakened after trying to gain value on the Bank of Russia's report on the balance of payments. Given that there are no fundamental factors that could drive the dollar above 91 rubles, this rally is likely to be short-lived. And thus, the market is expected to shortly return to at least 90 rubles per dollar. However, some analysts are pessimistic about the ruble. They recall that August has always been a tough month for the Russian currency, and we hope that this time will be different. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us, and see you soon.